Hello traders out there in Traderland, D7 here with the weekend edition. Music. We've been using this tune forever. This is good through Sunday, January 13th, 2019. And I'm back. Took a little bit of a vacation, hanging out. Friends and family. And anyway, let's get looking at the markets as a whole. Overall, Friday, we ended the day mostly mixed. Dow, Nasdaq down, small caps, financials higher. You can see that here. US dollar down, crude oil down 1.8%. That's noteworthy. Silver and gold slightly higher. VIX down 6.7%. We're now under 20. We're at 18.2. And Bitcoin's at 3,600, almost 3,800. Okay, let's take a look here at the S&P 500. You're going to see a lot of lines here. Don't pay too much attention to all the lines. All you're really concerned with on my charts are the candlestick patterns. That's all you really need to look at. The rest of the lines are for me. I'm a technician. I've been trading in the live markets 21 years this February. Over 2 decades utilizing technical analysis, and we make the complex simple. However, my charts do not look simple, but they are, believe it or not. I did pull a Fibonacci here, and here's the big problem, okay? We had this triangle. Do you guys see the triangle? This is the S&P 500, very important index that we look at as professional traders. It's going sideways in a symmetrical triangle because the symmetrical triangle was on the bottom side of this big run. Do you see this big run up, but the triangle happens down here in the lower part of it. It made it more bearish than bullish, and there it broke down. You'll notice I have arrows up here. These are my public calls that I make for people to look at. Do not trade off on my calls. These calls are simply for you to have a better understanding of the caliber of trader we are, so you can join us. Like, we have a mentorship coming up. It's a 3-day training program. If you want to join us for 3 days, you can do it from the comfort of your own home. You can do it. What dates are those? I think it's the 19th, 20th, and 21st. 19th, 20th, 21st. John@groktrade.com. If you want to send an email and say, hey, I'm interested in that, John@groktrade.com. Or just go to groktrade.com and click on Trading Mentor right there. That will do it. Okay. 3 days of advanced education. But check this out. We're dropping. The question is this a bear pullback? Is this a big bear pullback? Well, it is if it stays under the 61.8 Fibonacci. And let me show you that. Let me bring this over, you can see the numbers. The best place, it's really bearish if it stops at 38.2. It started to drop, but it decided to go higher, and it's bearish at 50%. Anything above 61.8, it's telling us that the chances of it getting back down there are not very good. Let me say it another way. A big drop, a little bear pullback, we should see another drop just like this leg. See this leg right here? We should see another one right there. Only if this up leg stays below 61.8. Okay? Another way to look at Fibonacci's is look at these as failure numbers. Let me get geeky on you here. If it rallies up to 38.2 and then drops, it has only a 38% chance of not getting back to this point. If it gets to 50%, there's a 50-50 chance of getting back to not getting there, okay? If this gets up to 61.8, there's a 61.8% chance it will not get back to this line, where this former low. If it gets up to 100, there's a 100% chance it won't get there. Now, that's not factual. That's just a good guideline. That's how to look at this. So this Fibonacci, it's going up. This is prime area for a significant sell-off. This is a great area to be looking for shorts. If you look at the diamonds, for example, diamonds, same thing. Let me bring these numbers over so you can see them. We're just over the 50, still below 61.8. The Nasdaq is right at 61.8. Do you see this? The Nasdaq is right there. I mean, the markets are set up for a big sell-off. Check this out. We're right at 61.8 on the Russell's 2000. We're right there, gang. I mean, holy smokes. It's financials. If you look, we're up, 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 up. Now, financials is a high base. What's interesting there is we're below the 50%. So there's still a great place for a big, sizable sell-off in the markets. But this high base tells us there's a good chance that this might pop higher. If it does pop higher and gets over the 61.8, then the markets are going to heal itself, and we should see the market start to drift higher once again. However, the odds are against that significantly. If you look at the US dollar, we're just down, 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 down. However, we have a hammer, really good chance for the markets or the dollar to go higher. If the dollar goes higher, it should put weight and pressure on the stock markets, the equities, and those should drift lower. So look for this market, look for the US dollar to go higher and the markets to suffer because of it. Crude oil, it's been going higher, 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 bouncing up, 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 nothing but just bullish. But check this out, silver. We put a buy on it way back here in November, and up, up, up. That's still a buy. Gold, got a buy back here in November, and it's a big bullish pennant. That's another buy. It's good. VIX has been going down, lower, lower, lower. We put a sell on that at the end of December, and it's just been dropping, dropping, dropping. Bitcoin, I had to put a sell on that yesterday, but it popped up. It's just a mess. Bitcoin's a mess. But I want to show you something that's very interesting, okay? We're going to go to the weekly charts. The weekly charts, if you look here, we drop, 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 drop. That's a bear pullback. That's a bear pullback on the S&P 500. If you go to the diamonds, that's a bear pullback underneath resistance. The Nasdaq drops, bear pullback. These are setting up for beautiful shorts on the weekly. If you look here at the small caps, we're going higher, bear pullback territory. Financials, it's a bear pullback right to resistance. You just don't get more pretty than that. I mean, this is set up for a big time sell. US dollar is dropping, dropping, dropping. Crude oil, finally, is popping last couple weeks. Silver is at a major resistance. I have a buy on it. I put a buy on weekly back in September. We did go higher, but we're at major resistance. Man, I wonder if I should put a sell on that. You know what? Let's take our profits. I'm going to put a sell on silver. Gold, we popped up over resistance, but it's a hanging man. You know what? I'm going to still put a sell on it, okay? I'm going to put a sell on that. I'm going to put a sell on it. Let's take our profits on the weekly gold and silver. VIX, I got a sell on it. It's dropping lower, lower, lower. That's fine. Okay, so let me show you something on the monthly that's very interesting. This is the S&P 500 monthly chart. Monthly chart. Okay, now we're only 11 days in by the time I did this video. This video is good to the 13th, so a couple weeks into a 5-week month. We're up, 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 up. So this is very typical before you get this massive red candlestick. Now, this is what I'm expecting to happen. First couple weeks, we go higher, 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 higher. As long as we stay below the 50% of this red candlestick, which act as a psychological area of resistance, or just look at the blue line, the 20-month moving average. As long as we can stay below that, there's a good chance that by the end of the month, it's going to sell off, and we'll just have an upper wick here. So this candlestick will just be a wick, an upper wick, and then we'll have a real red body right here dropping. This trend line is critically important. Big time important. If you look at this trend line, we have several hits. This hits back here in 2002. Okay, this is March 2002. We touch it there. Again, September 2001. This was September 11th, actually. Wow. 2001. Then we rally higher. We touch it again right here. This is, 2006. This is 2011. 2011, rather. That's 2011. This is 2016 in February. come up here, that's precisely where we're at right now. This line, because if it goes up and if it drops back down below 246 area, if we get down below 246 on the spider monthly, we are in dire straits and trouble. Major sell volume on the sell side, guys. So this is a fluke little pop here. I do not see this as lasting very long. However, if the markets stay bullish through all of January and we stay bullish here, then we have a good chance of rallying the next few months. This, I cannot begin to tell you how important it is. Where do we end the month for January is on the monthly chart on the S&P right there. Will we stay above this? Will we bounce off of this support line, or will we finally break it after decades? This goes back to 2000. Oh, this is 2009, not 2002, 2009. So we're talking nearly a decade trend line that has it's been validated, confirmed, and honored for over 9 years. And will it break? That's so critically important to me. The diamonds, this is the diamonds monthly. Just a quick look. Nasdaq monthly, we're below the 20-month moving average. Ouch. Russell's 2000, we're way below the 20-month moving average. Trying to bounce off this area of support. But we'll see how we're at the 50%. We're almost at the 50% of this red candlestick. Do you see that? That should be big time resistance. I can see it going up a little more, maybe to 145 area, and then selling off, and this being nothing but an upper shadow. Financials, trying to bounce off of this 43 moving average, 43-month moving average, which it may do. Dollar could be selling off. Crude oil, we're selling. Let's just see what happens to that. Quick look at silver. We're at major resistance on the monthly. Do you see this? Major resistance. So I can't put an arrow on this yet because we still got 3 weeks in this. Gold, big time bear pullback. I want to look at the Fibonacci on this though. We're right at 61.8, right at it. Do you see that? Right at it. So with a probably 8-to-1 reward risk ratio, great area to short gold. A great area to short gold. A quick look. We haven't done this in a while. Let's wrap up this video. Let's wrap it up, and I want to do so by looking at some tech stocks. Just a couple tech stocks. Right before we get into Apple and looking at that very important one, if you go to Grok Trade, I do have some classes. Trendline class, marketing class, or market maker class. This is how to make big time money. This is how to pinpoint order setups. This is how to make money in a bearish market. You can take those. But we have a 3-day class which is live. You can take it from the comfort of your own home, do your computer, do that through the Trading Mentor. Okay. Man, I got a tickle in my throat. So this, if you guys don't have one of these, it's not a Yeti. It's like a Yeti. It's a hollow. It's hollow, but it's a vacuum sealed, double paneled vacuum sealed. It's sort of like a gas in there, and they vacuum it. It keeps your coffee cold. Like I did a coffee like at 8:30 this morning. And by the time I'm doing this video, it's 4:30 my time. It's just now lost its warmth. Just now. So I'm drinking cold coffee. But it keeps the coffee hot all day long. It's crazy. They're called low balls, I think. Low balls, and they're little 10 ounces. You can get them from Walmart for $5 each. They're like $15 each off of Amazon. Oh, yeah. Anyway. Oh, let's get to... get back to the markets. Apple. A daily chart. Down. It's just another bear pullback. Look for that to drop again. Let's look at like Amazon. It's up. And we have a high base. Look, that's a buy opportunity, guys. Baba, up, up, up. It's not really a high base yet, but it may be. That could be a buy. Baidu, nothing there to speak of. Banking, nothing. Let's go to Facebook. So Facebook is starting to build a high base. That could get bullish up. Google, bull pullback. That could be ready to go bullish. GoPro is just up, up, up. Nothing there. Speak of Netflix. Let's look at that. They're up 13% Friday. Really good run. Bouncing right here. Anytime we do a jab off a trend line and it heals itself, that's an automatic buy. Boom, and it took off to the moon. It's looking really, really well on that buy. Nvidia, it's going higher. Anything else I want to look at? Let's look at PayPal. PayPal has been doing really well. Again, there's the jab. It healed itself. You buy that. Boom, up, money in the pocket. Shopify, Snap, Twitter. Let's look at Twitter. Bounce off of support. Boom, higher. Look for more consolidation here. Any breakout above this trend line would be a buy. All right, that's it. And monologue time, guys. I don't know if you had a chance to watch the video that Mark the Meerkat did on his performance in the daily chat room. If you haven't watched that video, go watch it. It's just a couple weeks ago. Watch that video. That is an amazing video. Amazing video. He is on a fire. He's the one that teaches our 3-day class. The 3-day class he teaches, he's the only person in the world that I would trust with my own money. With my own money, if I got hit in the head and I was laying out on the street and they scooped me up, they said, Des, you have no right to be trading your money anymore. You need to find a proxy or somebody to do that for you. Mark the Meerkat would be my man. He would be. He is an amazing trader, superstar in my book. Our master mentor. So he does our trainings. He is a teacher at heart. Really good at what he does. You know, the thing that I like best about Mark is he doesn't take anything too seriously. He's lighthearted on most things until it gets to risk and not losing money. That parts of the training, he's very serious and he's dogmatic about the rules. And that is perfect. The traders that struggle the most out there in the markets are those individuals that go into the markets like they go into a casino. It's whichever game excites them most, they have the biggest hopes for. They sit down at that table and they play. It's fun, it's exhilarating, it's exciting. But at the end of the day, at the end of the week, you always give up money to the house. Always. The idea is to have a foundation of trading education that allows you to put together a trading plan that's built off of trading rules that have been not justified, that have been validated and tested. So those rule sets that have been tested multiple times to show that it does increase odds, putting those rule sets together, so the accumulation of that, them working together, those rules, in a set, they don't bastardize themselves, but they actually work to the common good of you making profit on a consistent basis going into the future. It's just like a professional trader or a professional gambler who knows the odds like the back of his hand. When he goes in, he only plays that game. And he does so with precision, with excellence. And at the end of the day, he's up money. At the end of the week, he's up money. And certainly at the end of the month, he's up money. It's always an odds game. I mean, technically, from day to day, you're going to have losing days. But you should be asking yourself, whoa, if you're having a losing week, there could be a problem. You got to address that. If you're having a losing month, oh, man, stop. Everything needs to come to a screeching halt. And you've got to remedy that issue and that problem. Because it's a slippery slope. If you lose one month and you don't fix that, the next month you'll lose again. The next month, and you will wash out of the markets. 89% of all traders, the NASAA says that 89% of all retail traders will not just lose money, will blow through 100% of their trading capital in the markets. So anyway, we don't want to be that. Not you guys. You're Grokkers. So you need to go at it with your eyes wide open, your head screwed on correctly, with requisite education, armed with that, so you can go out there and be a formidable force to take profits from others playing this game against you. It is a very nasty game out there. So to minimize the fear and greed and the emotions, to minimize that, the only way to minimize that is to trade well below those emotional thresholds. So, and to do that, you have to have rule sets that you follow, and you have to trade at levels that are insignificant to you. Insignificant to you. So I'm rambling here, but I think that there's some pearls here that will be of benefit to you. So I want you to join us for 3 days of training, and it is not cheap. You're going to get the education that you need to be a rock star, to help you reach your full potential in the live market, so you can trade the live markets with confidence. Send John, JOHN, at groktrade.com. Send him an email, or just go to Grok Trade and click on Trading Mentor and go that route. And that'll reach John also. And you guys will talk. That's it. So take care, guys. We'll catch you all later. Bye. Guys, last couple weeks, you've lost probably 8 to 10 times more in your portfolio than what an education from us would have cost you. Invest in yourself. There's no greater expense than being ignorant and what market tuition will cost you. Do yourself a favor, look us up for mentoring. It's 3 days. We have one coming up. Go to Grok Trade. There's top of Grok Trade. I'm not even going to show you the website. Go to groktrade.com. At the top, there's a button there for hedging. You can take the hedging course. That'll help you during this time, so you don't get your head handed to you. But if you want to make money in this volatility, if you're just don't want your head handed to you, then mentoring. I'm not here peddling it to you, but what just irks me to no end is individuals who think that autodidacticism, that's trying to learn something themselves, is the smart way to go. And they think that learning to trade is something that you can get yourself. I'm telling you, I thought I blew through 2 accounts until one day I woke up and thought, I can't do it myself. Don't let that be you. Don't let your money dry up. Don't lose money in the markets. Learn to be savvy. Kill it out there. Be a shark. Don't be bait fish. Be the person out there that's the smart one, that has a system in place. Trading is significant. It can be the best thing that's ever happened to you and your family. Or it could be one of the heartaches, one of the broken dreams of your tomorrow. But I'll pose this one question to you. If you go through our trading mentorship, if you're like, man, I'm in, I don't care what it costs because I'm just, I'd rather put my money, invest it into education, and lose it in the markets. If that is you, ask yourself, after you go, we give you all the tips, all the tricks, we give you everything. We pull out the stops for you and give you everything to reach your full potential in trading. We give it all to you. From this date, 1 year from now, where will you be? How will your life, how will it have changed? That question will tell you everything you need to know. GrokTrade.com. Check us out. Catch you guys later. We'll see ya.